Hello everyone, welcome back to the channel. In today's video we have two topics. One, why Bitcoin is going down, what causing this price uncertainty, let's say. Second one, the price discovery of Itheum, how the listing will happen and what you need to keep in mind whether you want to sell or buy. So let's start with Bitcoin, because as you can see it is at below 45,000, and yesterday we talked about this and I said that it will go up because the supply is dropping, and that is still valid. People are not selling. Many institutions, let's say, are accumulating. That is visible on the on-chain data. The reserves at the exchanges are dropping. Therefore, we should see a price increase. But today we have a Fed meeting and we don't know what news will come out of that. I think the market is already pricing some bad news because inflation is higher and higher. The economy is not really going down and the Fed needs to tackle this inflation and economy rise, let's say. Therefore, the market very likely is pricing in some bad news. Now, as we saw it many times, if the news are not so bad as we were expecting, if they are neutral, let's say, it doesn't have to be some good news, then we would see a bounce from that. On the other hand, if the news are bad and they are, let's say, worse than we were expecting, then the price will feel it, and it is probable that we will go back to the 40,000 levels, maybe even lower. As you can see with yellow here, I have a trend line, and the trading analysis on the chart suggests that we could go low to the 39,000. I think at the 39,000 price, the accumulation would increase even more and it would bounce from there. But yeah, let's just see what this meeting will be about, what will be the news, and how the Fed decides what is their next step. Let's go forward because we have some news about the Itheum listing, about the Itheum Price Discovery, which was published by the Aaron network team. As you can see here in this post, the price discovery will be divided by 4 phases. One is when buyers will lock their Aaron and Itheum, whether they want to buy Itheum or sell Itheum, and a price will be defined. In phase 2, people will be able to deposit more if they see that, I don't know, the price is going up. Then people who want to sell Itheum, they still can deposit some. Obviously that will affect the price, but if the price doesn't move in favor of buyers or sellers and somebody wants to withdraw their tokens because they say that this is too cheap and I don't want to sell my Itheum for this price, they will have to pay a 0 to 5% withdrawal fee, which will remain in the smart contracts and will contribute to the price definition. In phase 3, deposits will no longer be possible and withdrawals will carry a 10% penalty, meaning that if you, I don't know, deposited 1000 Ethereum to sell, but there is no demand for it and the price is too low and you say that you don't want to sell it, then 100 tokens will remain in the smart contracts and they will contribute to the price. I think the rationale behind all of this is to avoid manipulation, because you could have a very big chunk of Ethereum which you want to sell for a lot of Aaron, and you can also have a lot of Aaron at the same time, which we know some wallets have. Now you could block or deposit your Ethereum and in the same time hundreds and thousands of Aaron to drive the price up, and before everything goes live you just withdraw your Aaron because you don't want to buy Ethereum. The price remains at the high level and a dump will happen. Now before we go forward, I just wanted to show you how the price is defined in a very simple doodle. I know that you love my doodles. So the price is defined with a very simple formula, is supply and demand. If the supply is equal to the demand, that is when the price is defined. You can see it on food, for example. The price doesn't fluctuate too much. The volatility starts when these two things come out of balance, meaning that the supply drops. Instead of 3 assets for sale daily, for example, there are only 2, but the demand is the same. Obviously, that would drive the price up. And that's what should happen to Bitcoin, because we can see that the offer, the supply is dropping because it is going out from the exchanges. However, at the same time, if the supply increases and the demand drops, meaning that less people are interested in that asset, as you can see in the bear market, for example, or at the end of the bull market, when people just drop all the assets on the market, but the demand is going down because it is becoming too expensive for people to buy, therefore people don't want to buy it, then the price go down. This very simple formula is also applied in the Aaron's price discovery phase 1. Depending how much Aaron is deposited and locked to buy Itheum, and depending how much Itheum is locked to sell for Aeron, that will define the price of the Itheum token. Now one thing is also induced here just to avoid the pump and dump, and that is locking the tokens for 3 days, because everyone who deposited their Aeron to buy Itheum and everybody who deposited their Itheum to buy or to sell it for Aeron, these will be locked tokens and they will be locked for 3 days after the listing. In the meantime, if somebody wants to add liquidity to provide liquidity for the 1000% APR in the first week, okay, not throughout the year, for the first week only, they can do it. They can use their locked coins as they would be unlocked. Now the trading will start and all these locked tokens will be locked for 3 days. But what happens when people don't lock their tokens? What if people, they say that, okay, I'm just gonna wait for the listing, because why would I lock my tokens? I will just see what is the price and then we'll decide whether I want to sell my Itheum or to buy Itheum. Now this is a dangerous and interesting strategy, and I'm gonna tell you my strategy at the end of the video, but before that I'm just gonna draw here some scenarios which could happen. If there is a big chunk of locked Aeron and a small chunk of locked Itheum, obviously the price will be up. This is the price axis and the price will be up. If this is the other way around, meaning that a small chunk of locked Aeron, I mean a small amount of people who want to buy Itheum, but a lot of people want to buy Itheum, the price will be low. Now at this point there will be a lot of people who didn't lock their Aeron or they didn't lock their Itheum because they are waiting to see what will be the price. Obviously, if the price is high, those people who have a lot of Itheum, they will just dump it on the market, and that will decrease the price because the demand will be lower as the supply. There will be a lot of supply. If it is the other way around and the Itheum's price is low, then many people will think that they want to buy Itheum because it is low. Why wouldn't they buy it? And they can buy it unlocked. Therefore, in the future, if the price goes down, they can get rid of it for a hefty profit. Now, if a lot of people will start to buy it, obviously they will drive up the price. And here is the catch, because those who want to sell Itheum are in an advantage, especially those who have a big chunk of Itheum, because those who have Itheum and didn't lock it and they are waiting because they have time, they will wait until the price goes up naturally from the demand because the price is low. After it went up, obviously those with a large wallets with a big bag of Itheum will dump it on the market in one, and that will cause a dump. Therefore, what I suggest, what I will do, well, I will lock some Aeron, but let's say I will lock half of the Aeron which I want to invest, because locking my Aeron, I will contribute to price to go up. I will get locked Itheum after the price discovery phase 2 is done. If there is a small demand for Itheum and I have my Aeron locked, that will mean that I will get more tokens at a low price, and probably after listing, when people come in and they see that the Itheum price is low, they will start to buy, it will go up, and then I can make some profit. Now the risk is that if the demand is high and we start with a high price, those who have unlocked Itheum which were not deposited in the smart contract will drop it on the market at the second as they open the trading, and the price go down and I will be in minus. Therefore I chose to risk half of the amount I want to invest, and then we will see. I will buy the dip and reduce my average cost and wait until it goes up, or I will just have more tokens and I can make some profits and buy back somewhere here. We don't know. I don't know. We will see what will happen. One thing is for sure, this weekend is Battle of Yields, when all this price discovery will be tested. It is here, and we can see how this deposits, locking mechanism, everything works, just to be prepared to lock some Aeron or to lock some Itheum, to sell it or buy it, whatever people want. So I'm very curious to see how it will go, and I'm very curious what will be the price of Itheum in this Battle of Yields. This is all I want to talk about today. Thank you for watching. Take care.